Hi and welcome. Today we will backtest a price breakout strategy using Python. Then we will apply different trade management approaches and increase our profits from 10% up to almost 100%. Before we continue, if you are interested in the coding part, you can download the Python notebook we will be using in this video from the link in the description below. And today's results can be applied to both manual and algorithmic trading. So if you are not into algorithmic trading, you can still use the information of our backtest for your manual trading. A quick recap on the indicator we presented in the previous video. We will be looking for a support or a resistance key level where the price is bouncing 3 times before breaking through the key level with a candle that closes above or below the key zone, depending on the direction of the price. And to detect the trend direction, today we will be using the moving average, and we will check if a set of candles is above or below the curve to determine whether we have an uptrend versus a downtrend. To complete the backtest, we will need trade management rules, and this basically means stop loss and take profit conditions. Imagine I'm taking a long position after this uptrend breakout candle. I could use a fixed value for the stop loss distance and a fixed ratio to determine the take profit distance. So these values will remain the same during the whole backtesting period. Obviously, this is not the best approach because the market might change and these values might not be the optimal values anymore. We could make something more dynamic that changes with the market using the RSI, for example. So whenever we have a long position, we close it when the RSI crosses a threshold value. For example, here I'm using 80. And for short positions, we can exit when the RSI drops below 20, for example. Of course, these values are just provided as an example. You might change these and experiment how they could influence our trading. A third method that will be tested in this video as well is using a stop loss value that is obtained as a percentage of the current price value. And using 2 take profit values, the closer take profit level will close half of our position, and at the same time, when we close half the position, we will move the stop loss to the entry level or a break even in case the price drops back. So this way we secure half the position in profit and we avoid losses. And in case the price continues advancing in our favor, it will touch the second take profit level, which is the highest one, and we close the other position half with full profit. This method limits our drawdowns because it limits our losses on positions level. And this will be it, basically. Let's go through the code and check on the results. The purpose here being to prove the power of trade management, all while backtesting our breakout indicator that we have presented in the previous video. So you can pick any of these results and use them in your manual trading or also in your algorithmic trading. And if you need the source code, again, there's a link in the description, as I've already mentioned. This is our Jupyter notebook file. I'm loading the data in this line into a data frame, into a pandas data frame. I'm using the Euro US dollar data, the daily time frame between 2003 and 2023. Then I'm renaming the columns so that my functions will work correctly. It's just replacing the upper first letters by a lowercase first letter. So you might want to change these depending on the types of data you have and whatever data you are loading and the titles of your columns. Then I'm filtering all the rows where we don't have any movement. So where the volume is equal to 0, these are usually discarded. So I'm just keeping the candles or the rows where the data frame volume column is different than 0. So these are rows where we had market movements and we're avoiding holidays and weekends and so on. So it's just part of cleaning the data. Then I'm resetting the index because obviously we have erased or removed some of the rows, and therefore we need to reset the index just to have a continuous increasing integer index. I'm computing the exponential moving average using pandas technical analysis package, which is imported here. So this is done using the EMA function, providing the closing price, and the length is equal to 50. So I'm using length 50 for this exponential moving average. And this is basically used to define the trend. If we have a series of candles above this curve, it's going to be an uptrend. And if we have a series of candles below the curve, then we consider that we have a downtrend. And this testing above or below the moving average curve is done in this cell where we called it the trend detection cell. So I'm taking back candles equal to 10. In other words, for each current candle, I'm checking the previous 10 candles, the consecutive candles. And if these 10 candles are all above the exponential moving average, then we have a signal equal to 2. It's an uptrend. If they are all below the moving average curve, we have a downtrend, so the signal is equal to 1. And in any other case, we either have 0 or we have 3 as a signal. Then when we have the signal, the trend signal from the EMA, I'm creating a new column called EMA signal. I'm adding it to the data frame, and it's equal to whatever this list is filled with. And it's filled within this for loop here, because we're looping basically over all the rows or all the candles to test if we have an uptrend signal or a downtrend signal or just no signal at all. So at this point, I can add a cell and just show you what does the data frame look like. So we have the open, high, low, closing price, and the volume column. We have the EMA that we've just computed, and we also have the EMA signal that we also computed right here in the cell. So we also have, if needed, the GMT time column. So far we're not using it, but in case you need it for your testing, you can also set it as an index and use it as required. Then we have a function that will test if a candle is a pivot or a fractal, it's a high or a low among its neighbors. And this is basically just comparing the extreme values of the candles with their neighbors on the left and on the right, just to see if these candles are pivot candles or fractals. So we either have a fractal low or a fractal high, pivot low and pivot high, or we can return 0 if we don't have any signal, if it's a normal candle, or return 3 if it's both, because sometimes you have those extreme candles that are higher and lower than all of their neighbors at the same time. This function, which is pivot, is applied here. So we're applying the function on the data frame, and then we're saving the results in a new column in the data frame called isPivot. We're taking window equals 6. In other words, we're considering for each candle 6 candles on its left or before the candle, and 6 candles on its right in the future on the right of the candle, just to check if the current candle is greater or lower than the 6 neighbors on the left and the 6 neighbors on the right. And at this point, we can plot these pivots. So I'm going to run this cell function. I'm going to run the following cell. So this one might take a while because we're applying on consecutive candles or consecutive rows. So you might want to wait a bit to compute everything. But once this is done, we can plot these pivot points or pivot candles, and we can mark them with some points visually. So I'm going to use this function and the other one. We're using plotly, global objects, and candlesticks, the open, high, low, and closing price. And then we're adding those points wherever we've detected those pivot candles. And this is the result that we are obtaining. So we know that it's working. I'm not going to spend too much time on it now because we've been repeating this part in the previous videos so far. So anyway, we have our fractals, we have our pivot points, we've identified these magic candles, we've marked them, and we can see visually that it's working well. Now I will be using detect structure function from the previous video. This is basically the function that will be detecting the support or resistance zone and detecting as well if we have a breakout for this key level. So it's going to detect 3 bouncing points on one same level. Could it be a support or resistance level? So this level will be marked as a key level. And then the function will also test if we have a breakout in the upper direction or in the lower direction, depending if we are talking about a resistance or a support level. And it's going to return a number. So if we have a support breakout, we're returning 1. Because it's breaking down in the downtrend direction, so we return 1. And in the opposite direction, if we have a breakout of a resistance level, we're returning 2. So this is the level break variable that we're returning here. Again, we're applying this function to the whole data frame. So I'm going to run the function cell and then the following cell to compute all the signals or to detect this pattern of breakout. And I'm storing all the results in the data frame column in a new column called pattern detected. Then we're going to print wherever we have few lines or few rows, wherever we have this signal different than 0. As we can see here, we have both categories, the uptrend breakout and the downtrend breakout as well. So I'm not going through all the details of this function because these were explained in the previous video. If you need to go back to the previous video where we're just building the indicator, then it would be a good idea, because in this video we'll be focusing more on the backtesting part. So now we can compute the RSI, again using the technical analysis package. I'm just using this function RSI, passing the closing prices and collecting the RSI values, saving them into the data frame under a new column name called RSI. Then we're setting the index to GMT time column. So I'm using, instead of using the integer index by default provided by pandas, I have a column called GMT time. So I'm using this as the index. And I'm changing the format because remember that we had long format. So we have the date, then the time, then the fractions of seconds. So when using the daily time frame, these details are not needed. Notice that the hour, minute, seconds, and fractions of seconds are always 0. So we can discard these, and this is what we are doing here. So I'm going to run this cell, and we're going to check the state of our current data frame. So we have the GMT time index, we have the open, high, low, close, the volume, the EMA signal, is pivot, the position points, this is just for plotting, and pattern detected, this is basically our signal, and the RSI that we're going to use it later on in our trade management when we're applying our backtesting. Now we can backtest the strategy. So I'm using the backtesting.py package. I'm inheriting from the strategy class. So first of all, we're defining the size of the lot that we are going to take for each position. So it's going to be 10,000 for now. And I'm defining the constructor that we can see here. We're using the signal function, the I signal function, just to query the signal from this function. So this is the signal function. And it's just going to return the pattern detected column value for each row. And so this is basically our signal. If we have 1, it's a selling signal. If we have 2, it's a buying signal. And we don't have a signal if we have 0. So we're not going to execute any trades unless we have this pattern detected signal that is returning something different than 0. So this is what the signal function does, and we're going to use it here for our indicator. Then we're going to define the take profit stop loss ratio. It's equal to 2 here. And the percentage is equal to 0.03. This is going to define the distance of our stop loss. It's going to be 3% below or above the current price. This is how we're going to trade. And if we have a signal different than 0 and at the same time we don't have any open trades currently on the market, so the length of the current open trades equal to 0, and at the same time the pattern detected column is equal to 2 for the current candle, then we're going to execute a buying position, which is here, so self.buy with the stop loss and the take profit and the size of the lot. And the stop loss is equal to the closing price, the current closing price of the current candle, minus the closing price times the percentage. So this is how we're doing it. It's a percentage of the current closing price for the current candle. So it's 3%, so minus 3. And then we compute the stop loss difference, so which is the absolute value between the stop loss and the closing price. So it's basically the distance actually from the stop loss to the current closing price of the current candle. And this is going to be used for the take profit because we need the take profit to be twice as far as the stop loss. And this is done here. So the take profit is equal to the closing price of the current candle plus the stop loss distance that we've just computed times the take profit stop loss ratio, which is right here. And that's it basically. So this is how we execute our buying position. Same thing for the selling position. If the pattern detected is equal to 1, we don't have any open trade currently on the market, we define the stop loss, the stop loss distance, then the take profit using the ratio, And then we can pass a selling position or a short position using the stop loss, take profit, and the size of the position. Then we define the backtester. We provide the data frame, the name of the strategy class, which we have just defined. And then we have a starting cash, 10,000 in dollars. And I'm using a margin of 1/5. So this is a leverage 1:5, just to increase our profits a bit. So when we run this backtest, this strategy, we have a profit around 20%. So over the whole data frame, that's not much. And the return per year is almost 1%. So that's not much. Interestingly, we have a win rate of 57%. We only have 7 trades. This is why our returns are so low. But looking at the win rate, it's 57%. And the take profit stop loss ratio is equal to 2. This is a great indicator, because if you're taking a take profit stop loss ratio equal to 2, it means that if you have a win rate above 33%, then your strategy is a winner. And in this case, we have 57%. So it's a good strategy overall. It's a good indicator overall. The only drawback is that we're not having as many signals as we wanted. And this is probably due to some of the parameters that we have tuned in some way, and also to the fact that we're using the daily time frame. So we're not going to get this pattern repeated very frequently if we're using a slow time frame. Probably better to tune this indicator for lower time frames, starting from the 4 hours down to the 1 hour or the hourly time frame might yield better results. In drawdown, we have a maximum drawdown of -7%, and the average drawdown is -1.6%. So this is safe, considering we're using a fully automated bot right here. So we have this strategy. How can we improve it? This is the first part where our stop loss and take profits are fixed during the whole backtesting period. So now we're going to go to something more dynamic. We can include the RSI, we can include different things. I will include this part in this cell that we have just defined right here. So this goes right after the beginning of the next function. So whenever we have defined this percentage parameter, so I'm going to paste this here. We can uncomment it. And what this does basically is that it's going to close the opened trades if the RSI is above 80 and if it's below 20, respectively, for the long and the short positions. So as we have mentioned, we could cancel the stop losses right here, but I'm going to keep them. So we're going to use 2 exit strategies, whichever comes first. Either the RSI is above or below the thresholds, or we have touched the stop loss or take profit values. Let's try to do this. We're going to run this. So far we have been obtaining 20% in returns. I'm going to run backtest again. And now with the RSI, we're down to 9.5%. So this was not a good idea. Sometimes it works, sometimes it doesn't. We're going to check if we can improve this a bit better. Now let's use the 2 take profits. So we're going to split our trade into 2 parts. Notice that we are applying the buying position here twice. The first time with the take profit TP1 and the second time with the TP2. Why? Because we have 2 take profit values. First one is basically equal to the stop loss distance, and the second one is equal to the stop loss distance times the take profit stop loss ratio. So we have 2 take profit values, and we're going to use both. Using the percentage again, the variable percentage, just like we have done before, I'm going to replace the size just to be able to compare with previously. We used a size 10,000 as a beginning right here. So we're going to use exactly the same here. Same take profit stop loss ratio, and this time we're going to split the take profits into 2 parts and the trading size into 2 parts. What's happening here is that since we're applying twice the buy and twice the sell functions, we're opening 2 positions. I'm going to split this in 2 to be fair with the previous backtest, because now if we're opening 2 positions, each for 5,000, then both will be 10,000 at a time. And only when we have 1 trade on the market, which means that half of the position is already closed, we've reached already one of the take profits, we're going to change the stop loss and to make it equal to the entry price. just as we have discussed in the beginning of this video when we've presented those trade management approaches. And when we run this backtest, we get something around 14% in returns total. We have always a win rate of 57% so far. The maximum drawdown -7% and -1.3% for the average drawdown. So it's not bad, but we haven't improved much so far. Let's try to increase the size. So what if we've traded with 50% of our equity? So here we have 44%, and we can further increase this to 0.99. We are trading with 100% of our equity. It's going to be around 99% in return. So we're just increasing the amount or the size of our positions here. And the buy and hold return will be -1.3%. And we have a drawdown of -20%, which is the maximum drawdown. So this is increased because basically we're using a margin 1 to 5. And we've also increased the lot sizing. So it's going to be somehow more risky. This is why the Sharpe ratio is expected to be low. So we have 0.36 as well as the Sortino as well, 0.57. So we have 13 trades in this case because we're multiplying our trades by 2 almost. And we have a win rate of 61%. So our win rate is slightly better. I think we have 57% here. And here we have 61%. This is basically because we're using closer take profit values, and sometimes the price reaches these values faster and easier than the long or the further take profit values. And we can take a look at the equity. We notice that we don't have much trades, so it's not very frequent, but when it's happening, it's working well, more or less. So we have an increasing equity over time. So the only challenge is how to make it more frequent. If you want to take the code and change some of the parameters, you can also try to include this part, which is the RSI part, in case you want to use both, to combine both trade managements using 2 take profits and using the RSI values as well. So let's check it out. We can run it actually and see how it works. And we have, well, it doesn't work well. Apparently we have 42% in return instead of the 99%. The Sharpe ratio is 0.25. Sortino is 0.37. We still have a high win rate, which is 61%. And the maximum drawdown is -27%. This is this is becoming a very risky strategy. So I'm going to keep the RSI part commented in this case. And just for your experimentation, you might want to change the percentages here. You might want to change the ratio. Let's try 1.5 and so on. You can optimize it actually, depending on your trading style. And this is it. Basically, this is the backtest for the breakout signal that we have introduced in the previous video. I hope you guys liked it, and I hope it wasn't very disappointing for you seeing these results. So it's not a get rich quick scheme, but at least we know what to expect when we are trading with this set of parameters. So if we're taking 3% for the stop loss distance, if we're taking a take profit stop loss ratio of 2, and if we're trading using the Euro US dollar daily time frame, using the breakout strategy with 3 bouncing points and so on, all the details that we have taken in this video. So these are the results that we should be expecting. So far, we haven't added any commissions, which is also something to be considered if you are trying to make something that you want to implement in real life trading. So just consider all these parameters. You might want to experiment, change things, optimize these parameters all over the code, and maybe you will reach a combination that's much better than what I'm showing you in this video. Good luck for the rest. Until our next video, trade safe and see you next time.